Not only to mention, oh my goodness, if I'm worried about the bank failing, I'd rather have my deposits in treasury bills than I would in the deposits of a bank, right? So you can see how this is all circular. I'm going to quote former Dallas Fed chairman Robert Kaplan, when he said we're only in the first innings of this banking crisis, regional banking crisis. And I'm also going to quote Charlie Munger, who I don't always see eye to eye on, but he said he believes there are another shoe to drop in the regional banking crisis as well. So just this afternoon is another example, and this isn't going to end. Despite what Jim Cramer says on TV, this is not going to end with First Republic, okay? That's not how banking works.
Federal Reserve Chairman Jerome Powell described U.S. Bank as strong and resilient, even as the Fed raised interest rates for the 10th time in just over a year. The Fed's decision came during a tumultuous week that saw the second largest bank collapse in U.S. history, with 3 of the 4 largest bank failures occurring since March. The Fed's decision to raise interest rates by 0.25 percentage points takes the Fed funds rate to a target range of 5.25%, the highest since August 2007. While the markets were focused on whether the Fed will pause here, Powell said that no decision was made on a pause during Wednesday's news conference. In this video, Greg Foss analyzes the latest from the Fed, what it means for the economy and your portfolio, and emphasizes the certainty of fiat debasement and debt spiral.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
I think Jerome Powell is a horrible poker player. I think his body language is reeks of desperation. He does say that the danger is that the Fed waits too long or in both directions. And in fact, that is always the danger, and the Fed always does. They tighten too much, but they waited too long to tighten at the outset as well. So this is a bit of a ping pong match that I've seen over my 30 years. Let's be very clear. You mentioned that he started by saying that the banking system is sound and resilient. I'm not sure if you've seen this after hours, Michelle, and this could be breaking news, but PacWest Bank is failing after hours. Okay, the bank stock is down 50% after hours. It's a very small bank, only 40 billion in assets, about 1/5 the size of First Republic, but nonetheless, it's on its way to the glue factory. Okay, so PacWest is done. It's over for them. There's probably another 20 banks that are in that position. So the banking system is not sound and resilient, Mr. Powell. You are not a good poker player. And the bigger news is not the Fed raising rates again to a range of 5 to 5.25%. It's the speed at which they raise the rates and the speed at which things are now breaking. So after hours, PacWest Bank stock, which was worth about $1 billion, which is still minuscule compared to its asset base, is now been carved in half as they announced that they are looking at strategic options. So I'm not sure if you saw this, but this today on Fed Day, the same day that Jerome Powell makes that statement, PacWest Bank is on its way to fail over the weekend, like all other banks do on a weekend, and it will be looking for buyers. My opinion only, but certainly that's the way the stock is trading after hours. There were 15,000 banks in the US, 15,000. And today there's less than 5,000. So in my 30-year career, over 10,000 US banks have been closed or merged. And that trend will continue, but there's still 5,000 of them. There's probably 25 meaningful regional banks that are going to fail, including the ones that have already happened, because First Republic Bank was a top 20 bank in the United States. When I say top 20, that's measured by the size of their balance sheet or the amount of loans they had outstanding. So PacWest is about 1/5 the size of First Republic. As I mentioned, it's $40 billion worth of loans. But you know, this is a domino effect. There is contagion risks. This is like the S&L crisis back in the 90s, okay? Savings and loan crisis back in the 90s. One leads to another, leads to another, leads to a lack of confidence. There's two things that concern people, right? The first is that the banks are at risk of mismarking or not mismarking. The valuation of their treasury portfolio has been carved. and therefore the equity valuation of the bank has been vaporized. The other side is the deposit side.
Yeah.
How much is insured? But what can you do with those deposits? You can now take those deposits out of the bank and put them in treasury bills and earn 5% versus bank deposits that get paid less than that. So this is all part of this is a result of the Fed increasing rates to make alternative to deposits, so alternative investments to cash deposits like treasury bills, that much more attractive.
Gregg criticized the Fed chairman in several tweets, calling him a terrible chess player and recommending that he pass the glue bag. He also advised Powell to acquire basic mathematical skills. Gregg also addressed the issue of bank failures, pointing out that while large banks could be bailed out, their depositors would not be. Now, let's return to the video.
Everybody assumes that banks are too big to fail, and largely the biggest banks are too big to fail, which means they will get bailed out. But it doesn't mean that shareholders get bailed out. And this is where a lot of money can be lost, okay? There are probably, by my estimation, at least $10 trillion of bank equity globally. They can literally be wiped out if the system fails. It doesn't mean depositors don't get made whole. But in the case of Cyprus, they had bank bail-ins, right? This is another reason why you have to be very careful. A bank bail-in basically means depositors got a haircut as well. So this is the risky nature of banking. Just because you're JP Morgan doesn't mean you use a different formula for banking. The JP Morgan has capital ratios which are similar to these other banks. Perhaps JP Morgan managed their interest rate risk better and hedged it more properly. But look, you can look at the available for sale securities and the mark-to-market losses that are on Bank of America balance sheet, and you're blown away. You're like, oh my God, that would vaporize the lion's share of their equity as well if they had to sell or mark-to-market that portfolio. So at the end of the day, banking is banking. There will be more failures. Will they be cataclysmic failures? That's the difference. Contagion, where the system breaks down. Possibly, my hope is no, but I'm telling you, you saw Credit Suisse fail, then you've seen, and Credit Suisse largely failed because of initial butterfly wings over in America. But listen, a few more failures in regional banks in America, and all of a sudden Deutsche Bank is on the ropes. And Deutsche Bank is way more levered than Credit Suisse was. Its derivatives book, which is off balance sheet, is way larger. And Deutsche Bank is a globally systemically important bank called a GSIB. And this will not be allowed to fail outright. It doesn't mean the shareholders won't get wiped out exactly the way Credit Suisse shareholders did. So these are the type of contagion events that slowly then suddenly the system breaks because of the leverage in the system. We have a deficit in the United States, I say we, has a deficit running. So the annual deficit is running at 7% of GDP. And the total accumulated debt is over 120% of GDP, which means next year it'll be 127% of GDP and then 134% of GDP. The only escape, the only way to solve that debt spiral is by printing more money. And when you print more money, fiat debases. And when fiat debases, soft assets lose their value, like bonds. Even if you get your money back, you lend the government $100 for 10 years, you get your $100 back in 10 years with a series of coupons. That $100 is worth $65 equivalent from time zero. This is not a sound investment. You need to be invested in smart, sound money assets, which include Bitcoin and include gold. And that's why I don't try and make forecasts. All I know when someone tells me or shows me something with 100% certainty, which is fiat debasement because of the debt spiral, I take measures into my own hands to protect myself and buy hard assets.
Gregg discusses quantitative easing as the only solution to the Fed problem and how the Fed is tightening even though Powell has refused to admit it. He also notes that this is the first time the Fed has collectively announced the possibility of a recession and how it is a serious warning sign.
the only way they're going to solve this is turn on the quantitative easing taps again, the QE infinity. So he's pretending he's doing quantitative tightening, but he's sucking and blowing, okay? He's doing quantitative tightening by allowing things to roll off the balance sheet. And then he announces the BTFP. I don't remember what it stands for, but I call it the backstop the fiat Ponzi, okay? The BTFP program. So it stands for something term funding program. That is effectively quantitative easing, but they're not admitting it that. You cannot lend at 100% of collateral value or par value on the bonds that are on a bank's portfolio. Even if they're worth 60% of par, you're giving them 100% collateral. I'll call that quantitative easing, Mr. Powell. Don't suck and blow. You are not doing quantitative tightening, okay? It's all a lark. And this is why they're gaslighting the public. It's really disgraceful. But that being said, that's what they have to do in order to keep this fiat Ponzi continuing. It's unbelievable that they're actually predicting a recession as a group. And then Powell is on the outside saying, well, the group is predicting the recession, but I still think we can thread the needle and get this proverbial soft landing. Look, he said, I'm going to quote him over time. You tell me. We're going to be lower for longer. What was he talking about? Oh, yeah, interest rates. Okay. We see inflation, but inflation's going to be transitory. Yeah. It wasn't. Now inflation's going to be higher for longer. He's 3 for 3 in being wrong. Okay. So I'm a betting man. I'm going to say he's going to be wrong 4 out of 4 times. I don't think he's going to be able to thread the needle on this soft landing. But maybe it doesn't matter, Michelle, because maybe the restriction in credit standards because of the failing banks and the financial conditions index forces a more destructive landing on the Fed. Because why? This is not monetary policy now. This is a question of leverage coming out of the system. So he's managing through the rearview mirror. I know Warren Buffett says he thinks that Powell is doing an amazing job. I'm going to take the absolute opposite side of the coin. I think he's a lawyer who's sitting in a risk chair, and he's very underqualified to manage the most important risk chair in the world. And I don't think he's doing a good job.
Central bank officials maintain that the banking industry as a whole is stable. However, expected tightening in credit conditions and heightened regulations ahead are likely to weigh further on economic growth, which was just 1.1% annualized in the first quarter. The post-meeting statement acknowledged that tighter credit conditions for households and businesses are expected to negatively impact economic activity, hiring, and inflation. This language was similar to the March statement, which came just after the collapses of Silicon Valley Bank and Signature Bank. At the March FOMC meeting, the Fed's economists warned that a shallow recession was likely due to the banking issues. Issues in the financial sector have continued, with JP Morgan Chase taking over First Republic on Monday. Powell said such a transaction was an exception, and while it was not an ideal situation, it was a good outcome for the banking system. As for the outcome of the Fed's announcement on the banking sector, Gregg projected that there could be a series of bank failures within the weekend. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.